Are you trying to decide between swing trading and day trading in Forex? Both strategies have their pros and cons, but which one suits you better? So in this video, I'll break down how these two approaches differ, their advantages, and the personality types they work best for. Stick around until the end because I'll share a bonus tip for maximum profit. So what are we going to cover today? First, we start with what is swing trading, what is day trading, pros and cons of each, choosing the right strategy for you, and last but not least, the bonus tip. If you want more Forex tips and strategies, do not forget to like and subscribe. Alright, so what is swing trading? Swing trading involves holding trades for several days to weeks. And yeah, you're basically aiming to capture medium-term price movements. And swing trading has a few benefits. One is that it is less time intensive, so you do not need to monitor charts all day, making it ideal for people with full-time jobs, right? And fewer trades, of course, it's also a benefit. Fewer but significant trades mean less stress and lower transaction costs. With swing trading, you focus on broader trends and reduce the impact of short-term volatility, which is really nice if you ask me. And there are a few tools that you use in terms of time frames. I use the daily and the 4-hour charts for swing trading. And of course, you can use multiple. There are thousands or maybe million types of indicators, but if you want to keep it simple, just use the moving averages, the RSI and the MACD. Those are the most popular ones, and they still work for swing trading. Let me show you a few of the indicators. Okay, so this is TradingView. This is the platform I use for charting, and you can sign up in one of the links down below in the description. But over here you see indicators, and then you can play around with many kind of indicators. Over here we have the moving average convergence divergence, aka the MACD. The RSI is also really popular. Over here the relative strength index, you see it over here. There's the RSI, and I personally also use the moving averages. So over here now we're looking at the 50 exponential moving average, and this is the 800 exponential moving averages. And the moving averages, they show the trend. So over here we see a crossover. We see that the red one, the 50, is below the green one, so we're looking for sell opportunities because we are in a downtrend, right? So over here we see a crossover, and then price goes to the upside. So you can use these indicators if you like to swing trade. Next up, day trading. So what is day trading? Well, it involves opening and closing multiple trades within the same day, aiming to profit from short-term price movements instead of the median, right? And also, day trading has a few benefits. It's basically perfect for those who enjoy a hands-on approach and thrive on quick decisions. So if you have a little bit more time compared to swing trading, this is for you. So let's say that you are an entrepreneur and you can basically choose whenever you want to work. This might be better than swing trading, because swing trading is better for people who basically have a full-time job, right? So they have a 9 to 5. They can't sit and watch the chart instead of day traders. No overnight risk. So since all trades are closed by day's end, you avoid unexpected gaps or overnight news. So at the end of the day, you close all the trades, and if there is a news event or whatever, you're not in a trade. So that's good. So there are a few. We call it black swan events, and you can look for you can look it up, search for the black swan events on Google, but those are crazy events that happen once in a while, but if they happen, they destroy many traders, but also brokers and other participants. and it's basically because they are active in the market. But if you have closed all the trades, then it's not a problem at all. Frequent opportunities. More trades mean more chances to profit. So the more you trade, the higher the chance is that you also make more profit. And it's also, maybe it's even better to just learn how to trade, right? So if you experience trading and all the things that are involved with trading, then you will learn much more than just taking, let's say, one trade a week or even one trade a month, right? So that's really important if you are a day trader. And for day trading, we use the 1 minute, but more like the 5 or the 15 minute, and sometimes even the 30-minute charts. And indicators, Bollinger Bands, VWAP, and the stochastic oscillator. These are indicators that are really useful if you are a day trader, if you want to make some quick profits during a day. And it's basically the same as I showed. You go to a trading view, you click on indicators, and just select a few of these indicators. The pros and cons. Well, swing trading, the pros are you have more time flexibility. Quite straightforward. You do not have to sit behind the screen for a few hours a day. It's just you analyze the market, and let's say it takes you about 15 minutes a day to choose if you want to take a trade or not. So more time flexibility. And as a swing trader, you focus more on significant moves and you have less noise. Now, if you trade the daily charts, one candle is just one day, right? So there's less noise. If you trade the 1 minute, you see many candles, 60 candles in basically 1 hour. So that's crazy. And also lower psychological pressure, which is also important. Swing trading cons, it requires patience. Profits may take days or weeks to materialize. As I mentioned, sometimes you take 1 or 2 trades a month. So that's it really requires patience. So if you're not a patient person, swing trading might not the best thing for you. And overnight risks due to global news events. I already covered that. Then we have day trading, the pros. Quick turnaround on trades, which is really useful if you want to learn, of course. No need to worry about overnight news. High frequency action for active traders. So if you like to profit many times on a specific day, this is really good because you can sometimes even scalp for a few pips. You're just in the trade for, let's say, 10-15 pips, and then you're out of the trade, and then your day trading, your trading activity for the day is over, right? The cons is that it's time consuming, so it requires constant attention to charts. You have to sit in front of the screen and analyze the charts and just wait basically for a setup to appear. Higher transaction cost due to frequent trades. So the more you trade, the more cost you also have, the transaction cost you have to pay. So that's a downside of day trading. And it can be stressful and mentally exhausting. That's also a con. And if you can't handle that, it's quite easy. Then you have to look more into swing trading. Which is right for you? Which strategy? And that's basically a question you have to ask yourself. How much time can you dedicate to trading? That's the first question. And if you have a lot of time, then maybe day trading is something for you. If you do not have a lot of time, swing trading might be better. Do you prefer quick action or long-term trends? If you are not that patient, then probably long-term trends is not for you. And then you can just buy, wait for 20 pips, happens in, let's say, 1 or 2 hours, and then you're out of the trade, right? So that might be better for you. And what is your risk tolerance is also a really important question. And also it depends on your personality, right? So swing trading is great, as I mentioned, for patient, analytical thinkers who can commit a few hours per week. And day trading is ideal for action-oriented individuals who thrive under pressure and enjoy a fast-paced environment. So if you like to, let's say that you, let's say 10, 15 pips, you're in, out of the trade, and then the day is over. Day trading is definitely for you. But sometimes it could happen that there is not a ideal trading setup. So then you have to wait another hour or another 2-3 hours until that setup appears, and then you take the trade, right? So that's day trading. A bonus tip for me, you can combine a swing trading and a day trading approach. You can mix it up, and you use swing trading to build your portfolio and day trading for additional smaller profits during market hours. So and there's an example. You can swing trade larger trends on Euro USD while day trading high volatility pairs like GBP JPY during peak market hours. So you have to understand on what time is GBP JPY really volatile. Well, there's often during London session, so that's about, for me, it's 9:00 a.m. until about, let's say, 1-2 o'clock p.m. And so you are in a Euro USD, let's say, sell position because the interest rates are higher for the dollar than the euro. So you're in an overall sell position, and swing trade sell position. But you also look, when you have time, of course, on the GBP JPY chart for scalping day trading moves, right? So let's say you wait for a setup, 15 pips, because there's a lot of volatility, 15-20 pips in and out of the market. And a recap in one sentence: swing trading focuses on the bigger picture, while day trading thrives on quick moves, and the best strategy depends on your goals and lifestyle. So tell me, which strategy are you excited to try first? And let me also know which strategy suits your personality best. Let me know down below in the comments. And if you still do not know which trading strategy suits your personality best, I have a link down below to a quiz, and then you can answer a few questions, and based on these questions you know which trading strategy suits your personality best. If you like this video, give it a thumbs up, subscribe, and YouTube also recommends based on their algorithm which video you have to see next. I'll see you in the next video.